Good morning and welcome to this weekly market update. Yes, it is a little bit later in the week. We normally do this on a Monday, but unfortunately we had a few technical difficulties on Monday and Tuesday with the recording software. But anyway, I think today is actually a good day to do it because the last couple of days have been quite quiet in the markets, and also there's some very big economic data out today, tomorrow and Friday. So from today onwards is really, in my opinion, where the week starts this week in terms of the FX markets. Anyway, let's not waste any time. What we normally do for any new followers is we'll go through the weekly charts and daily charts and maybe 4-hour charts as well, giving a weekly sort of outlook on the main currency pairs. So what we'll do is we'll go through euro against the US dollar, pound against the US dollar, euro against the pound, and we'll have a little look at gold and maybe silver if we get time. Okay, so let's not waste any time. Let's start with EURUSD. In terms of a weekly perspective, because as we're doing a weekly outlook, we want to be looking at this coming week, yeah. So let's not dwell too much on the weekly chart. Let's focus more. When I'm going to look at the weekly chart, I will talk a little bit about moving averages, but the main thing is the kind of last week's weekly candle. If you're thinking about what's going to happen this week, the first step you should look at really is look at what the weekly candle will look like. So as you can see here, hovering over last week's weekly candle, not quite a bearish engulfing, but it is a bearish candle. But if it was a real reversal candle, then yes, it would have engulfed below the previous candle, i.e. it would have made a weekly close below the previous week's candle, but it didn't do that. And as you can see already, we are kind of coming down a little bit, so maybe we are seeing a reversal this week. But in terms of technical analysis, it isn't the best of selling indicators, let's say. But what you can see here as well, which is more of a selling indicator, is you can see this 100-week moving average. Sorry, I forgot to say at the start, we have 3 moving averages here on each of the charts. First one, the red one, is a 55 simple moving average. The purple is a 100 simple moving average, and the gold is a 200 simple moving average. So on the weekly chart, you've got 55-week, 100-week and 200-week moving average. On the daily charts, it's 55-day, 100-day and 200-day moving average. Okay, so anyway, where was I? As you can see here on the weekly chart, we have this 100-week moving average capping this euro-dollar pair. As you can see, the previous 2 weeks' candles have come up, near tested it and failed, and last week's candle was a definite big failure. So we could see a sell-off over the next few weeks. But in terms of this week, I wouldn't say it's a massive selling opportunity. I wouldn't say it should absolutely tank this week, and that has been quite evident these first couple of days. It hasn't really sold off dramatically in terms of this EURUSD pair. But what is more interesting, in my opinion, is the daily chart, and that's what I'm going to flick over to now. Okay, so on the daily chart, what do we have here? What do we have last week? In fact, I'll draw one thing actually. We do have this downtrend resistance here, okay? So that's one thing you should have on your charts. We're in a clear downtrend on the daily chart, okay? This goes back to 22nd of August last year. And that held quite well last week. I'll just zoom in for you so you see it a bit clearly. We had a clear failure at this trendline resistance. I'll just highlight that for you there. About 1, 2, 3, 4 candles failed to close below, failed to close above that level, and meaning that this is a complete trend line now with 3 clear points. And we are starting to sell off now, okay? So that trend line has held quite well. In terms of the Fibonacci levels, or even any trend line actually, what happened, well, in fact the last couple of weeks we had quite a nice little trend line from there. So we have 1 point there, 1 point there and another point there, and this got broken yesterday. We had a daily candlestick close below this trend line, which is the indication that the market could sell off. But the amount of times that I've personally seen trend lines break and then done a kind of fake out where the next daily candlestick is then posted to close above this trend line. So it's good to still have this trend line on your charts, but I'm just going to remove it for now, just so I can talk about some other things to make it a little bit clearer. In terms of support and resistance levels, as you can see, we're miles away from this gold 200-day moving average, so that's not really one to talk about at the minute. But you can see we're kind of inside this ranging period between the 100-day and the 55-day moving average. One other thing actually for new followers, you may ask why using 55 and not 50, is because 55 is a Fibonacci number, so I personally think it respects the market quite well. As you can see, the last few weeks around this level here, this 55-day moving average held quite well, and as you can see up here, the 100 reversed off it. So we're in a kind of range. We did have a false, well, not really a false breaker, but we had a breakout and closed below this 100-day, but then we failed at this trend line, so we're now below this 100-day, meaning that we're technically still in this range. In terms of the Fibonacci levels, Fibonacci retracement, the recent swing low is this here on the daily chart, okay? In fact, I'll move this to 4 hours so it makes it a little bit more obvious. I'll get rid of that big orange circle as well. There we are. So in terms of the recent swing low, we had a nice reaction here at the 61.8, and this is also a nice little confluence zone. Actually, I'll just highlight on the charts. We had a nice little confluence area around here with the 200 bar move. You can't call it 204 hour moving average, you call it 200 bar moving average, and this 61.8. We got a nice little reaction, but then as you can see there, we then bounced off of the 50% level there. The 50% then acted as resistance. We're now coming down. We've closed below this 61.8. So it was very interesting last week. I had this Fibonacci level on my chart, and it did react very, very nicely. This is kind of out of play now. It hasn't come down to the 78.6 level, so it's not too interesting. What I do think is interesting, and as you can see for any new followers, I don't have the 38.2 level on here. It's not the 38.2 or the 23.6. I personally don't have it because I like it for it to retrace a bit. I personally think it reacts better off the 50%, and it's so easy to have too many levels in your chart to pick out which one. So I personally think the 50% and 61.8 very, very useful, and they're the two main ones that you want to be looking at for any new people looking at Fibonacci retracement levels. I personally recommend looking at the 50% and 61.8 for bounces, because I think they react better. Another thing actually for this week, I mean, there's no point in dwelling too much on what happened last week, because that's not going to make you any money, is it? So what I will have a look at here is we have a little downtrend resistance here. You can actually see it's clearer on the 1 hour chart. And this is acting quite well so far. We have had a little breakout, but you can see it's kind of hovering around this period of minutes. We've broken above and then it's come back down and tested. So it looks like that we've had a little breakout of this trendline resistance on the euro dollar 1 hour chart. So, and you can see the previous candle actually is a nice, quite a bullish engulfing candle. So the odds for the moment for the next few days, in my opinion, would be to the upside, just because of this trendline break. So to the upside, the resistances are, let's go back to the daily, the main resistances this week, if it continues to break and hold above this trend line, would be this 100-day moving average here, and the price of that currently is 1.3275. so that's the main key resistance level. But really, I mean, the next few days, in terms of a weekly outlook, you just have to say it's still hovering between this 100-day and 55-day. If we do get a continued sell-off, and let's say that downtrend resistance holds, then it will be this 55-day and the 50% Fibonacci retracement level. Okay, it's a nice sort of confluence zone there. So that's at around 130.54. So let's say and what's at the 55 is 130.70. So in between 130.50 and 130.70 is a nice little support zone if we do get any a continued sell-off. Okay, but it's quite clearly you can see what the main resistance zones this week are on the euro dollar. You've got that 100-day and that trendline resistance. That's all I'd really be focused on. in terms of a weekly perspective, or even for next week as well. Okay, let's have a look at the pound dollar chart. I'll just clear up a few things here. Okay, so let's have a look at the weekly chart. As again, let's not dwell on too much about the weekly chart, let's just have a look at the main last week's candle. As you can see, last week we had a kind of shooting star pattern in that previous, in last week's candlestick. So, but the problem I have with it is that it's got a bit too much lower wick, which isn't a pure sell signal. But as you can see, it is a reactor. Even though it's got a little bit of a low wick, it still is technically a shooting star. Which is a reversal pattern, which means that this week maybe we should get a sell-off. But as you can see here, we've got this key 100-week moving average, which has been acting as fantastic support zone. So the weekly close will be very, very important this week to see if we get closed below or above this weekly, this 100-week moving average. Let's say if we get any pop to the upside on the weekly chart, then you can see is clearly we've got this 55-week moving average at around 160.14. Okay, let's flip to the daily chart, which I think is more interesting. First let's delete all that. Okay, in terms of the daily chart, you can see very clearly here that we've got the 100-day moving average acting as very key support here, and it's kind of reacted previously as well as a very good sort of little support zone. Okay, so currently we are testing key support at the minute. What I will do is I'll draw Fibonacci. Are we testing the 50% or are we away from it? No, we are currently away from it. So personally not really interested in the Fibonacci, but I will leave that on the charts. Let's say we do get a sell-off, a further sell-off, then that 50% zone will be near. But as you can see, it's got to get, we've got to have a daily close below this 100-day moving average, and also this 55-day moving average at around 156.60. Okay, and in terms of, let's say it starts well, it already is bouncing off this 100-day this 100-day moving average, then the next key resistance zone on that daily chart is the 200-day moving average at around 1.5884. Okay, so in terms of pound dollar, not really a lot of clear direction as it has been ranging, as you can see, but in terms of support and resistance, you've got to say it is bouncing off this 100-day moving average currently. So odds are to the upside in terms of the next few days. Okay, remember this is all in terms of technical. I haven't spoken about the fundamentals yet. I will have a look at the weekly calendar after looking at these technicals, because they are very, very important this week. Okay, so let's move on to euro against the pound. Okay, so in terms of daily chart, what do we have here? The only thing that I'm really concerned about here in terms of technical analysis is this trendline support. So you can see it's been clearly holding since the beginning of January. Very nice little trend line there. In terms of the moving averages, you can see we're trying to get a nice test. It's hovering at around this 55-day moving average currently. What's the price of that? The 55-day moving average is at around 0.8344. But it looks like we're coming above this now. So if we do see any increased pop to the upside, then I will be looking at this 100-day moving average at around 0.8447. That'll be the key resistance zone that you've got to have in the charts. But in terms of weekly outlook, the odds are clearly here to the upside. You have to say it's bounces, but we had a nice daily close yesterday off of this trendline support, and we're looking, if we get a daily close above this 55-day moving average, then you've got to say the odds are looking towards that 100-day moving average in terms of resistance. And if we do get a very, very strong next few days, remember there's non-farm payrolls on Friday, then we could get a pop up to this 200-day. But let's keep it realistic. Over the next few days, we're probably not going to reach that 200-day, but this 100-day could definitely be on the radar. It should be on the radar on your charts. Okay, so that's done for the main forex pairs really. Let's have a little look at gold. I'll clear this up for you a second. So let's have a look at gold. What we've spoken about over the last few weeks, months on the weekly chart is this key trendline resistance holding on your weekly chart, and we have this key, it's the 55-week moving average, which has been fantastic zone of resistance with that massive confluence a few weeks ago that you can clearly see here on your charts. I remember saying that was a clear point where it's going to be looking to the upside over the next few weeks, and that's what we've continued to have over the last sort of 8 weeks, is just a nice bounce off this trend line. And yeah, it's been acting as a great sort of support zone. But anyway, where are we now in terms of the weekly chart? Last week we did have a bearish engulfing candle. I'll just highlight that for you there. As you can see there, we had this bearish engulfing candle last week, which we had a weekly close below its previous week candle, so we are getting a bit of a sell-off. Not that I like to talk about the fundamentals too much, but the main reason for that really last week in terms of moves wise, we had Fed Chairman Ben Bernanke come out and not indicate of any more quantitative easing, which means basically that he's not going to be wanting to print any more money, and therefore the dollar has come back into the action and has acted as a nice safe haven. So that's why we saw a lot of dollar strength. So when Ben Bernanke speaks, gold normally goes up because he always indicates some more money printing, and you basically just not going to want to own any US dollars if he keeps on printing money and devaluing the currency. So everyone goes to gold. So that's what we had last week, is he didn't indicate of any more quantitative easing and the dollar got strong. So that's why we've had this sell-off, and it looks like we are continuing to have this sell-off on the weekly chart. So in terms of the weekly perspective, let's say if we continue to come down, then it's going to be very obvious where the key support is. It's at this trendline support, at this 55-week moving average at around 16.19 level. Okay, so in terms of the weekly, that's what you've got to be looking at really. Let's clear this up a bit for the daily chart. So in terms of the daily, what do we have? We have quite a bit of a cluster around these support and resistance. Well, not support and resistance, but in terms of the moving averages, you have a cluster of the 100, 55, and 100 day. We did have a key close last week below this 100-day moving average, as you can see around here. And this has continued to sell off, and we have had the key daily close below the 55-day. But now we're starting to bounce off of this 200-day moving average a bit, so it looks like it might pop up a bit. In terms of Fibonacci levels, is it bouncing off this 50%? Has it not reached it? No, it has not quite reached it yet. In fact, I'll show you a little reason why I don't massively like to use the 38.2 level, because it was very key last week. A lot of people were talking about it, about 38.2% and how it's starting to bounce. As you can see there, I'll just highlight this for you. We did have a little bounce off of the 38.2, but as you can see, it's quite a weak bounce. It didn't really shoot up from there. In fact, that was a nice little confluence zone. So initially buyers would have come in and they would have made their pips on that first bounce up there. But then you can see it start to fail down a bit, and this is why I prefer to use the 50%. Because I think when it bounces off the 50%, it really does. You normally tend to get a very good bounce up, and it continues to trend for the next few days. So yeah, there's a good sort of example there of why I prefer to use the 50% and 61.8. I think they're stronger support levels. Okay, in terms of weekly outlook, let's go back to that weekly. Yes, it has sold off a bit, but we are near this 50%. If we get a bounce of this 50%, then I'd say the odds are for an upside. But we're around this cluster of Fibonacci levels, and more importantly, this 200-day is looking to bounce. So you have to say, it looks like it's done a nice bit of a retracement now. And you say these next few days, it looks like it wants to go up, similar to EURUSD and similar to pound against the dollar. Okay, so that's kind of all I think we've done for the technicals now. We've gone over the main few forex pairs, and we've gone through the main commodity in my opinion, which is gold. As I said at the start of the video, this week is very key in terms of economic data. So let's have a look at what is coming up in the next few days. Okay, you see Monday and Tuesday were quite quiet in terms of news. A few bits of we had a bit of weak UK news there. Halifax HPI came out minus 0.5% versus 0.3% forecast. And Monday, what do we have? We had another bit of weak UK data. UK services PMI was expected at 55.0 and came out at 53.8. So yeah, anyway, let's have a little look at what we've got today. Okay, the big news coming up today is at 1:15 PM, which is the US ADP non-farm employment change. This always comes out before the US non-farms numbers, which are really important on the Friday. This normally gives a little bit of an indication. There is quite a strong correlation between the ADP numbers and the non-farm numbers, but the amount of times that I've seen a weak ADP numbers and then good non-farm numbers has just been incredible, and also vice versa. So last month we had the numbers come out at 170,000, and this week we're having a big forecast upwards to 204,000. Okay, so the markets are expecting a big rise in the ADP job numbers. Okay, let's have a look on Thursday. What do we have? UK, we got the official bank rate announcement, expected to remain the same at 0.5%, and also we have the asset purchase facility. Remember, we had an increase of 75 billion pounds into the system last time round, so now this is around 325 billion. Forecast for it to stay the same. I'll be very surprised if Mervyn King gets out his printing presses again and starts printing out some more money. And as always, when the official bank rate comes out, we do have the MPC rate statement to see who's on the hawkish and who's on the dovish side in terms of the Bank of England. At 12:45, big Eurozone data. We have the their interest rate decision as well. Forecast at 1% as well. Previously it was at 1%. Of course, their interest rate is still at 1%. Not no expectation for any increase or decrease in their interest rate. Will be very interesting to see what Mario Draghi has to say at 1:30 PM when we have the ECB press conference. So of course he will be talking about what has influenced him in his decision to either A, increase rates, B, decrease rates, or C, is to leave them the same. So that'll be very interesting. 1:30 we do have the weekly jobless claims. They won't be too important in the markets because everyone's looking at the big non-farm payroll numbers that will be coming out on Friday. But anyway, they are forecast to be at around 352,000. Last week was 351,000, so that'll be just the usual, really. But anyway, Friday is the big day. Okay, 1:30 AM we do have China CPI inflation. It's very important to the whole world overall economy, and also to the US economy, as they do a lot of trade with each other. This is the year-on-year figure. So last year 4.5% is expected to decrease at 3.6%, so that'll be very interesting to see what comes out of there. In terms of the UK, at 9:30 AM we have the UK manufacturing production numbers month on month, expected at 0.4%, previously 1.0%, so big decrease there. That'll be interesting to see. Also from the UK, out at 9:30 we have the PPI input month on month, forecast to be 0.7%, previous month was 0.5, so looking for an increase there. We've got some Canadian data for any of you that are interested in Canadian data. That's out at 12 o'clock and 1:30, but the headline for the month, as usual, is the US non-farm employment change numbers, expected at 208,000. Last month was 243,000, a big increase, and that's why I think it's very important to look. I mean, the ADP numbers are expected a big forecast up, and the non-farm number is expected a big decrease down. So very interesting to see there what will happen today in terms of the ADP numbers, because there should be a key correlation between those and the non-farm numbers. That'll be very interesting to see. But at the end of the day, what the markets are really looking for is anything over 200,000. 200,000 is above 200,000 is the number that it needs to be to continue the kind of rally in the stock markets that we've seen this year. We've seen them up 7% already. so they'll need to hold it. Anything below 200,000 will not be good for the markets. And you have to remember, if it is below 200,000, then there may be more indication that the US will print more money to stimulate the economy. So be very, very careful. We could see, let's say if it is a weak number, the people may not be flooding towards the US dollar as a safe haven. They may be flooding towards the euro, as Ben Bernanke may print more money, which will weaken the dollar. So you have to remember these correlations, because they do happen. That's why it's very, very tricky at the minute when the US data comes out, to see how the markets will react. Anyway, other bit of data that comes out at the same time with the, of course, we have the US unemployment rate that always comes out at the same time. Expected at 8.3%. We've seen a steady decline in that. And the US trade balance figures expected at minus 48.8 thousand. That should be billion, sorry. Previous was minus 48.8 billion. Okay, that is all for the week, I think, this week. So yeah, I hope you enjoyed that video. I hope you've got those levels, key levels and indicators on your charts. And yeah, be very cautious this week, because there's big data out, of course, on there's nothing wrong with not trading on a Friday with non-farm payrolls, because it can be very volatile, but then again, there's a lot of opportunities to make a lot of money on non-farm payroll day, because the markets are so volatile. But if you stick to the levels, then you should be okay. Okay, that's all for today. Hope you have a great week. I'll see you next Monday. Have a great one. Thank you.